Hi everyone, my name is Mary Redmond and I wanted to talk about the New Zealand US dollar today, and today is Tuesday the 19th, and the reason I'm looking at this is because I think this is one of the better commodity currencies, which may be a very good short coming up in the next week or two. And if you look at the monthly chart of New Zealand US dollar, it's interesting. You see a big spike up out of the monthly Bollinger Bands, and that's pretty rare. Actually, this only occurs once every year or so. These are spikes to the upside, these are spikes to the downside, but they usually show a pretty good probability of what could be a very profitable trade, because the Bollinger Bands show the trading range of a pair within a particular standard deviation, and the odds favor that you're going to see a big spike up out of it, particularly on a monthly or a weekly basis. It's very likely that it's going to retrace. And you've also got a daily chart pattern. Now you can see that there was a very strong upward trending line here. It really went up almost in a straight line every day for close to a month. And it did break out of that. So that clear break is obviously a bearish signal. And the New Zealand dollar and Australian dollar both trade in very close tandem to the stock market. And New Zealand in particular is considered to be a riskier economy. They're a very small economy. It's only around 150 billion total GDP. They're primarily their revenues primarily come from agriculture and tourism and exports to Australia and China as well as to the US. So what happens in China and Australia is obviously going to affect New Zealand. And because New Zealand is a much smaller economy and it's much riskier, it's perceived as being riskier, it's also going to be impacted much more strongly than some other economies by issues like the European debt crisis. So if a country like Portugal needs to have a bailout, then it could be more difficult for a country like New Zealand to get financing in the international debt markets, because the smaller countries are just perceived as being more vulnerable in the event of a global economic downturn. And you've also got here, in addition to that, what you've got in addition to breaking that upward trend, you've got a pattern that looks a little bit like a diamond may be forming here. And a diamond is usually a period of indecision, and generally when it breaks, it usually breaks in the opposite of the trend that it was moving in prior to the formation of the diamond. So what you're looking at, what I'm looking at, when you have a situation like one of these commodity currencies, you really want to keep an eye on the stock market. And this is a 6-month chart of the Dow. And you can see that it's having a hard time clearing the 12,450 level. It may have started a new downward trending channel here, but it's a concern jumping into shorts in the stock market right now while the Fed's liquidity program is still going on. They're still purchasing treasuries because that's still giving some support to the market. So I've been of the opinion that we're probably due to have a pretty good correction, a 15 to 20% correction in the stock market and in commodities this year in 2011, but it's going to be tricky with the timing over the next few weeks because you've still got some liquidity supporting these stock markets. On the other hand, the big institutions out there are starting to prepare for what's going to happen after the Fed's quantitative easing ends, and a lot of hedge funds, a lot of big mutual funds, they might be hesitant to take big positions in stocks right now because they know when that money just isn't coming into the market anymore, that we could have a big downturn. So I'm inclined to short the market, the New Zealand dollar and the Australian dollar, on big rallies in the stock market. That's what I'm thinking. And I'm also thinking that a good potential short for the New Zealand dollar would be right up around this resistance area, 79.25, 79.50, with a stop up above 80. If it were to clear 80, that would probably be an area where you'd want to stop. And you've got the calendar going on. Of course, this week you're probably going to see a slowdown in the U.S. markets because they'll be closed on Friday. And next week you've got both a U.S. Fed meeting and a New Zealand Central Bank meeting on the 27th. They're going to announce their decisions, so that should be an interesting day. Now, my take is that this Fed meeting is going to be very bullish for the dollar, because I think this is the Fed meeting at which they're going to remove the term keep rates low for an extended period of time, and they're also going to confirm that they're going to finish up their $600 billion program of QE, and then they're going to wait and see what happens. So if they say that, and those are their terms, then it probably would be bullish for the dollar. And the New Zealand Central Bank, the RBNZ Governor Bullard, usually doesn't say too much when he talks. He probably will leave rates alone and then just say that they'll monitor the situation and do whatever's best at the next meeting. So that's what I'm looking for a pretty good, what could be potentially a good short on the New Zealand dollar, US dollar.